Lots of action in the market. Foreign institutional investors or FIIs have pulled over 2.87 lakh crore rupees or $30.27 billion out of Indian stocks this year so far. That's already higher than the entire outflow recorded in 2025. In this next report, we decode the record outflows in just 6 months so far this year and which sector in particular is bleeding. Take a look.
Globally, the Indian stock market is lagging. The Nifty 500 is down roughly 7% year to date, while the S&P 500 has gained close to 5% in the same window. That is a performance gap of over 10 percentage points. The story so far in 2026 is that India's market structure has matured enough to absorb the shock, but foreign capital has clearly found better value elsewhere. Among the sectors, banking and financial services stocks have taken the biggest hit. They have faced FII outflows for 3 straight months. In March, rupees 60,655 crores, 30,856 crore in April and 23,141 crore in May. Add March's hit alone and nearly half of this year's total foreign selling. The reason? Valuations got rich and global funds started booking profits in India's most owned sector. But the foreign investor exodus has not been a blanket retreat. FIIs have been rotating, moving out of tech and FMCG and into capital goods. That comes after financials were in investor pockets along with energy and infrastructure bets earlier in the year. By May, services, capital goods and metals were the sectors actually attracting fresh foreign money, even as financials, oil and gas, FMCG and auto saw continued selling. What's driving the exit? The rupee has slid from 85 to 95 against the dollar since January 2025, making it a currency story as much as a stock story. Sticky US inflation has kept the Federal Reserve's rate high, making treasury yields look safer than emerging market risk. Layer on West Asia tensions pushing crude oil higher, and you have a textbook risk-off script. Here's the twist. FII ownership in Indian stocks has dropped to around 16%, the lowest in nearly 2 decades, and for the first time has fallen below domestic institutional ownership. Indian institutional investors, including mutual funds, SIPs, and insurers, absorbed nearly 90% of the foreign selling, keeping the market from a disorderly crash. Business Bureau WION, World is One.